The Vanguard VHY ETF is the most popular dividend-focused ETF in Australia, investing in blue chip shares that are forecast to pay dividends. Notice how I said forecast. The VHY ETF uses analyst forecasts from a big database and ranks Australia's blue chip shares for those companies that are expected to pay dividends. Many of those companies will pay dividends with franking credits, and if you are eligible, those franking credits will pass through the ETF and to you as an investor at tax time. Remember to keep a hold of that member statement. The VHY ETF is extremely popular amongst investors who are seeking passive income from the share market, because by focusing on dividend-focused investments, it actually enables you to earn higher returns from the income component from your investment versus the capital gains component. So whereas, say, like the Vanguard VAS ETF does not have a dividend focus, the VHY ETF would be expected to generate more returns from income over capital gains versus the VAS ETF. Because the VHY ETF is still reasonably well diversified, having some caps on the individual amount that can be invested in any one stock and also over sectors as a whole, because it's reasonably well diversified, the VHY ETF can form either part of the core of a portfolio or the satellites around the outside. And so by that I mean you could have it as part of your core exposure to Australian shares if you want to generate more franking credits and dividend income versus, say, a vanilla ETF that just invests in everything. Or you could have it in the tactical component or the satellite component of your strategic asset allocation. And the reason that you would put it there is if you have, say, a 3 or a 5 year time horizon. So a much shorter time horizon than that ultra long-term focus in the core. There are many other dividend ETFs or dividend-focused ETFs within the Australian shares segment for ETFs. It's important to keep in mind, however, that the VHY ETF has quite a long-term track record and has done a reasonably good job at targeting companies that are focused on dividend income. So if dividends are what you're after, the VHY ETF can go right on your watch list.